and gentlemen, all protocols observed, good morning. Right now I want to be making my keynote speech. I'll do it later when the guest is here. But for now, allow me just to take you through who we are as Faida Investment Bank, what we do, and also our role as we come here as part of your fund managers for the KETSA AIF. So I hope we'll have a good time while we dive deep into what we do. So first, I want to introduce Faida Investment Bank. Allow me to move to the side. And I wanted to first describe who is Faida Investment Bank and what do we do. So first, Faida Investment Bank is an investment bank that was registered in 1994. And as at 2026, we are going to hit over 30, we've gone 31 years, going to 32 years in the industry, doing various things. So just an overall of what we do. First is advisory and mergers and acquisition. So a good example of one of them that we've actually participated in was the merger of NIC and CBA Bank to form NCBA. We also deal with what is called fixed income. This is where we actually trade in bonds. So the government bonds, the treasury bills, and others. We also do capital markets and advisory. So here we raise money for private companies and also public companies. We do fund management, and this is one of the reasons we are here. So on the fund management business, first we have our own funds, which fall under what we call Faida Unit Trust funds, where we have 4 funds. On the 4 funds, all of them are called OAK. So we have OAK Money Market Fund, OAK Fixed Income Fund, OAK Multi-Asset Special Fund Kenya Shilling, and OAK Multi-Asset Special Fund USD. Out of the 4, we have 2 operating as at right now, and in short, they are called special funds. So the Special Fund Kenya Shilling and the Special Fund USD, which I'll speak more into it later. Then we have a trading in equities. When I use the word equities, it sounds complicated, but they are just shares or stocks. So the likes of Safaricom, ABSA, Equity, EABL, the normal shares that you can buy from the Nairobi Securities Exchange. What have we achieved so far? First, Faida is a leading investment bank in Kenya with a strong track record in advisory and capital raising, fund management, and brokerage services. Some of the key transactions that we've led, the first one being the KPC IPO, which did well just the beginning of this year. It was from February of this year. The other thing is on OAK Special Fund. So far, as at this week, we've actually brought this fund to 18.7 billion. Right now, we are at 18.75 billion assets under management, and the other smaller fund, that's the USD fund, we are slightly above $3 million. Then we have equities market, which I'm going to show you on the turnovers that we've had, and even the bonds market, the turnovers that we've had. What's our mission? The mission for Faida Investment Bank is to inspire financial independence and dignity. So we want you to be independent, but we want it to be in a dignified way. What's our vision? Our vision is Africa's future funded. And our core values is passionate, responsive, and teamwork. Moving on to the divisions in Faida Investment Bank. So we basically have 3 divisions. So brokerage, corporate finance, and the other one is fund management. Fund management, this is where we'll fall as KETSA, AIF, that is Alternative Investment Fund. Now looking at brokerage, what we've done in the year 2025, the bond turnover through Faida Investment Bank has been 401 billion shillings. That's the turnover that we did, falling to position 3 of all the investment bank and brokerages in Kenya. On equities, we had a turnover of 35.86 billion, also hitting position 3 in the country in terms of being the brokers in the country. On the other side, it's the funds that we have, and that's what I had highlighted before. So the Kenya Shilling Fund has 18.75 billion as at this week, and the USD fund just being slightly above $3 million US. Moving further to who we are as Oak, there are these, let me say, why choose us? So we actually call ourselves the 3 T's. So first, we are trusted. Secondly, we are transparent. Third, we are tactful. We want to be as transparent as possible, and you'll find that when you invest in Oak, and unlike the other special funds, we actually give statements on a monthly basis. As much as it may seem more volatile, we prefer being transparent so that you can see and understand why and how special funds work. It's a new space in the country, and we look forward to people understanding it more. We've also committed to a lot of learning. We do a lot of webinars. We do a lot of videos. If you go to our whether it's YouTube, Facebook, Instagram, or all our socials, you'll find various videos on us explaining what we invest in, how special funds work, and different assets. Assets, just know it's a vehicle to make money. Fund overview, just highlighting on the 2 special funds. First, I'll generalize them, both the Kenya Shilling and the USD, because they are very similar except the currency, the underlying currency. So for the Kenya Shilling, the base currency is Kenya Shilling, while the USD is the United States dollar. Fund inception for the Kenya Shilling was February 2024. So we've run about 2 years and 4 months as at now. I'd highlighted on what we have as assets under management, that is AUM. Minimum investment for individuals, as much as you may invest as KETSA, you may invest as individual SACCOs. Remember, as an individual, you can invest in it, and you are welcome to invest. So the minimum investment is 500,000 shillings, and minimum top-up is 50,000, although we are removing minimum top-up. So it's not mandatory. You can even put 10,000 because now we are automating even how you top up. The lock-in period is 6 months. However, the investment horizon, how long are you supposed to invest? Preferably, this is money that you are not looking to pay school fees in the next 3 months. So you should invest at least for 1 year to 2 years for long-term, for us to express how we invest and for you to see the returns. I won't go through the others. I'll just jump to USD. USD is similar. Minimum investment now is in dollars, so it's $5,000. $5,000, give or take, it's around 650,000 Kenya shillings. And minimum top-up being $500. The fund started last year in August, and that's why it's still a young fund, but we expect it to grow faster this year. I'll just group on or tell you where we invest, because if you look at the target that we have for the Kenya Shilling, and today I'll skew myself to the Kenya Shilling, we target to give a return of 20%. It's a target, not an assurance, and I'll show what we've done in the past. But where do we invest for us to make this? So we invest basically in what we call 2 different classes. One is the global space, and the other one is the local space. So starting with the local space, we invest in the normal treasury bonds. That's the government securities. We invest in T-bills. We invest in what is called cash and cash equivalents. That is the normal fixed deposit and call deposit with banks. We also place money with other institutions in terms of commercial papers and corporate bonds. Then what we call NSE securities, so the normal stocks, and also we have what we call Nairobi Securities Exchange derivatives. I won't dive into them for now. Then we have the global space. This is where we invest outside the country. I know most of you have heard of Eurobonds. Eurobonds is one of the spaces that we invest in, and what I'll mention as sovereign bonds, we are just saying, in other words, other countries that are issuing bonds. Like one of the places we invest is in Uganda, because Uganda bonds are actually yielding, or they have a higher return than Kenya. They are doing those likes of 16 to 18%. So we are also investing in that. We also invest in what we call commodities. Commodities is just oil. I won't go into lean hogs and other things. So they are just the normal goods that are traded worldwide, but you are buying and selling using what is called an exchange. So even if I buy those, I'm not going to have barrels sitting in our office, but it's just a transaction as we speculate and sell to make more money. We trade in precious metals, so gold, silver, but you'll never find them in our offices. So this is just trading to make money. And also in foreign stocks. So foreign stocks are the likes of Meta. Meta is the company that owns Facebook. There is Alphabet, there is Tesla, and the rest. So these are some of the stocks that we trade in. Now, looking at the performance, how have we performed since inception for the Kenya Shilling Fund? The first year, we had a very big return, which was 29.38% as an absolute return after fees. That time, we closed with an AUM, or assets under management, of around 938 million. The second year, that is 2025, we closed with 18.99%. That's why I said 20% is a target. We can have plus or minus maybe 2, which is okay, because there are markets. Then this year, the first quarter, we actually closed with 4.72% absolute. So we are looking to close the year properly as we look at it. Just there's a picture there, just a pie graph, just showing you the distribution of where we've placed our money. As much as special funds may be termed risky, I want to say that part of, actually majority of what we are holding is still in local government bonds, which are more interest bearing, although we trade them for capital gains, and more safer. The other more risky assets are actually a smaller portion because we have something called leverage that helps us to make more from them. Then a visualization of someone who invested on the first day we opened the fund. If that person placed 1 million as at end of the first, actually end of March, how much would they have had? By now, after 2 years, 1 month, they would have made 618,000 shillings from the 1 million. That is a growth of 61.84%. This is what we call the power of compounding. So sometimes when you keep the money longer, it multiplies faster than when you keep on withdrawing the income that you've earned. Similarly, I want to look at the USD fund. And on the USD fund, we want to look since inception till now, we have had what we call annualized. If it was 1 year, we have not hit 1 year yet, we would have a return of 11.73%, as you can see on the screen. So an absolute return of 8.68%. For this year, Q1, we had a return of 2.98% as absolute. In other words, that's what literally was made. Moving on to someone who might have invested $10,000 when we started in August last year. By now, they would have made $774,000.63. This is an absolute return of 7.75% within those months. We are not yet past 1 year. And remember, the target for this is 10%. Now, moving on to KETSA Alternative Investment Fund. And the question is, what is an alternative investment fund? This one, if you look at it, there are new regulations that came in the Capital Markets Authority from 2023. So before, I won't even go through this. I'll just elaborate and explain what we have. We have had what we call traditional funds, which I'll categorize to 4. So one is the normal money market fund. I'm sure most of you have heard MMF. That's a song that has been sung since 2024. And what is a money market fund? And I'll explain that. Then they have the fixed income fund, We have the equity fund and we have the balance fund. If I may flip to that, just a moment. Sorry. Let me just explain that on those four. So a fixed income fund is a fund that actually is skewed to investing in bonds. A money market fund is a fund that is skewed for liquidity. This is a fund that people enter and can leave within 7 days, 5 days, or even a month. Fixed income, they are looking at more growth, but consistent with interests. Then there is the equity fund. Equity fund is a fund skewed to investing in stocks. So like the NSE stocks. So they'll buy the Safaricom, the EABL, the ABSA, and the rest. And based on how the stocks go up and down, they'll be able to either make money and sometimes lose a bit of money. Then we have a hybrid of those, which is called a balanced fund, whereby you take maybe a percentage, 60% is in fixed income, 40% is in equities or the stocks. So this one helps because sometimes stocks do very well, but sometimes they can come down. But because you have on the other side what we call the fixed income, and they have a regular income, they neutralize that volatility. Those are the traditional funds. After that, 2023, we had the emergence of what we call special funds. And special funds are several, including Oak Special Fund, Kenya Shilling and Oak Special Fund USD. So under that regulation, right now we have about 27 licenses that have been issued, but only a handful are operational. Then beyond that, now we've come to what we are calling the alternative investment funds. And among them, you can look at the characteristics. I won't go through all of them, but that's where KETSA falls under. This is for sophisticated investors because you can see even the constituents of the KETSA AIF are actually SACCOs. SACCOs that understand, they have a proper board and management to understand the investments on which they are investing in. The good thing about special funds and AIFs, alternative investment funds, we call them a blank canvas, whereby we sit down as the investment committee and decide that we are going to invest in this and this and this and this. These are the risk parameters, and this is the do's and don'ts. And it's presented through the trustees, custody, and eventually the capital markets. The capital markets allow it. Once they allow it, now it's the work of trustees to actually have oversight or to ensure that the rules of the blank canvas are actually followed. And that is what we are doing. And this is all defined with what we call an information memorandum, which has been already submitted pre-licensing of KETSA. Now, one last thing. What's our role as the fund manager? Because we've been privileged to be given the role as the fund manager of KETSA Alternative Investment Fund. One is investment management. Literally, once the money comes, making sure there is efficiency, not just watching the money there, but placing money into a vehicle that will make more money. That is the first thing. Secondly, it's portfolio oversight and reporting. We have to ensure that based on the blank canvas that I said, that we said we'll invest in 1, 2, 3, 4, ensuring that the distribution is per what we said, and we report to the regulators. So who are the people we report to? First is the promoter. Promoter, it's KETSA. We have to report and say, yes, this is how we are sitting. Two, we have to report to the trustee. The trustee will have a report from the fund manager, and we'll also have a report from the custody to ensure that if we say we have 2 billion assets under management, is it true or fictitious? Is it someone who just keyed a figure in a laptop, or is it true? Because that one will be matched by what the custodian says. 3, we have to report to the Capital Markets Authority every quarter to say that this is what we have and there are templates for that. Further than that, there is oversight. Oversight being done by internal audit, being done by external audit, and trustee on the other side. The other role is risk management. That is maintain and enforce risk limits conduct stress testing, operate the breach register, and uphold fiduciary obligations to the investors at all times. Remember, we are there to work for you as the investors, whether as an individual, whether as a direct SACCO or at KETSA, the main account. Then the other thing is regulatory compliance, to ensure that we are doing things as per regulation, and also invest in all allowable investment vehicles. Then the other thing is due diligence and governance. Conduct counterparty, credit, legal due diligence prior to deploying capital. In other words, if there is a commercial bank that has issues, it's our work to ensure that as much as they might offer, let's say, a call deposit at 15%, it is our work to have investigated and say, no, 15 looks good, but it might be risky. The bank can go down in 2 or 3 days. We better place the money at 9% in a strong bank where you are sure that 1 year from now, you still get your money. And that brings me to the end of the presentation. Thank you, and looking forward to working with you.